Let's just look at the week in hindsight and the economic data flow that we've seen to this point. Anything particularly that stands out? We know retail sales was very disappointing, coming in at 4.6% growth for August when economists were predicting 8.4%. Perhaps that's a good starting point?
Yes, sure. And it was definitely disappointing. I think most of us, including our company, also expected around 8.5%. So 4.6 came as a blow. It wasn't the only statistic that disappointed. We also saw manufacturing production coming in also lower than expected, at 5.3. So lots of disappointing numbers. Wholesale could be a pre-runner for retail. Also seemed to disappoint, even though it's growing. It's a good sign, but it's 0.2% nominal current constant numbers. And then the last shining point for the week was mining production, a little bit more positive there.
The manufacturing, that being impacted by strikes in both August, and obviously we're going to see that impact continuing when we see September's numbers out.
I think we might. I think we definitely underestimated the impact of the strike. Hopefully it won't have such a large impact still in the September data, but I think hopefully we'll see a bigger number, at least than 4%, more towards the 7% for next month.
And if we look at these retail sales, and we look at this growth of 4.6% for the month of August, that is now ex the World Cup impact. Do you think that's a more realistic base going forward?
Unfortunately, yes. I think it really reflects what's going on locally with our consumer market, our demand, and it's disappointing. We've seen consumer demand coming up a bit better, recovering a bit from last year in the first and second quarter, but now it seems we might be in for a disappointing figure in consumer demand or final consumption expenditure by households for the third quarter.
The big question, of course, every economist is being asked repeatedly, what is going to happen at the November MPC? Are we going to see interest rates coming down by 50 basis points? Maybe the South African Reserve Bank is going to shock us all and drop by 1.5% in an attempt to influence that carry trade, to drop the interest rate differential.
Well, I think the major priority of the APC has always been to look at interest rates. If you look at interest rates, there's a room for a 50 basis point cut. The 1.5,
not 1.5.
Well, that'll be a shock to the market. Definitely be a shock. I think I'm sure that will have an effect on the rand trading. I don't know if the Reserve Bank and the MPC will have such an aggressive approach, though.
So you're forecasting 50 basis points. Are you in that camp?
Yes.
Do you think that then that will be the bottom?
Not necessarily. I think we expected to see a bottoming out of CPI, and it didn't happen. So it really depends on what data we see released. But there's a likelihood for another 50 basis point cut, maybe in the beginning of next year.